Today, I'm going to be going through a lesson on symmetry. This is a method of Fibonacci analysis. I actually learned this from the Fibonacci queen, Carolyn Borodin. She's absolutely amazing. And I have been using it in my trading ever since. Now, I can tell you when I first started trading, I was about maybe a year and a half, 2 years in. I was so frustrated. I could not figure out how to get in and get out at the right moments in time. Now, obviously, this is one of the most important aspects of trading. When you first learn to trade, everybody will go down a different path. But essentially, what I did when I started was I first started following people, right? Because I couldn't come up with my own trade ideas. So I would follow other people. And what I would do is I would learn from them and I would say, okay, let me get in when they're getting in and get out when they're getting out. And then let me figure out how the trade worked. If it didn't work, why. And that's really what you do in the beginning when you're first starting trading, right? Because that's where you start. So it was after that point that I began to figure out what trading setups are. What is a trading setup? Now, a trading setup is going to be a reason to get into a trade. And so when you can learn from other traders their reasons to get into a trade, that brings you to the point where you can say, hey, that is a good setup. I like that strategy. I want to learn more. How can I make it better? Or, that doesn't really work for me. Like, let's move on to something new. So after you learn the setups or the reasons to get into trades, you really need to have a good method of analysis so that you can figure out your best entry and your best exit points, okay? Because that's what trading is all about, right? Anybody can get into a trade, but you have to be able to get out in order to make the money. So it was around this point in my trading career where I was really lost and I felt like I couldn't get in and out at the right times. And I met the Fibonacci queen. And so she told me, hey, just read my book. And I did. And so I started learning Fibonacci. And it was at that point that I combined Fibonacci analysis with additional trade setups, such as the squeeze, which is something that we use at Simpler Trading every single day. Because when you're looking at a chart, it's challenging to say, well, I think it's going to go higher, but where can I get in, right? And that's what symmetry is for. So especially when we're in a strong trend like we're in right now, the very common question is always, okay, well, the market keeps going higher, so what's a better spot for me to get in? Now, I'm going to demonstrate first on Tesla because I think that this is pretty powerful chart right here. And I'm going to use the higher time frame because if you remember back in January when everyone was looking at Tesla and saying, oh my gosh, it's going to continue careening into the depths of despair. What's really interesting about this is the move that Tesla experienced down into about the $100 price point was very similar to a move that Tesla had already experienced. And this is what symmetry is all about. It's all about looking at a chart and saying, okay, what is normal for this ticker? Has this ticker made this kind of move before? And then what occurred after that fact? And so you're looking at the past to then say what could potentially happen in the future. So when you're looking at a chart, and I'm going to use this Tesla chart for an example, you want to compare swings that are in the same market condition and in the same direction. So for example, I'm talking about this swing right here. Remember when, Elon took over Twitter and the whole thing was just on fire? Well, if you look at a monthly chart time frame, you can see that this move happened before, right? Tesla had a big down move, then it traded higher. Okay, so if you're comparing these two swings and you say, all right, Tesla's done this before. This is the second time it's done it. Do we think it could possibly bounce here? This is a moment in time where you can use symmetry. So in Thinkorswim, it's going to be this tool right here. You are going to click on this button and it's going to be the three-pointed tool. And so what you want to do is you want to just compare the past swing to the current swing, okay? And this would have been done, a couple months ago, just so I'm being clear. when you were trying to identify a moment in time to buy Tesla. Okay, so something's going down, you want to find a way to buy the dip. So what you're going to do is you're going to select these swings and you're going to say, okay, Tesla fell this much before and it started falling again right here when it's going on the flip side. So a high to a low to a high. And what the tool does is it's going to project the pullback zone. Now you can see in this instance, this line was exactly the same as this line. So that's what we call symmetry, okay? So in this instance in the market, when you're drawing lines on a chart and you're looking for a pullback zone, the kicker here is the symmetrical zone going to hold? Yes or no? This is why you want to look for a hold of the zone and a trade off of that level. So in this instance, yes, the zone did hold. And when the zone holds, what that means is that it's a valid zone. You have a symmetrical move. And so at this point, that's where you can look for a buy trigger. Now, you might say, well, but Danielle, it fell before and it rallied, but then it rolled over and died. So what about on the way up? Okay, well, that's again another time where you can use symmetry. You can say, yes, you're right. It did rally on the way back up before and then it rolled over and died. So is it going to do that again? So let's measure this swing right here with this swing right here and see what that's telling us. So let's just go ahead and now I'll leave that on there. So you're going to click right here on the low, click up here on the high, click on the low. And do you see how we have a symmetrical level right here? It was at $210 a share. Okay. And do you see how the market exploded through that value? So one of my favorite setups, in addition to buying and going in the direction of symmetry, is when you get a symmetry break. Okay. So when you get a symmetry break, that's an incredibly powerful signal. And essentially what that's saying is that, yeah, Tesla rallied and rolled over last time. This is a very key area of resistance. And you can see how price chopped around at that level. That was actually one of my last price targets in Tesla. And then after it broke this resistance zone, that's when I said, okay, now it's through resistance. Now we're onwards and upwards. So you can see how it can work both ways. So, and here's another swing actually right here. We can measure that one too. So you can see that it rallied this way, 1, 2, 3. And so we have not just one zone right here, but two zones in which Tesla has now broken symmetry and is exploding higher. So you have a situation where if you get this nice pullback, a hit and a hold, and you start to see the shift in the price pattern, what you want to look for is the shift in the overall trend. So for me personally, I use the trend strength candles. Those demonstrate, when the trend is shifting. So you can see how there's red, red, red. It shifts to yellow, then to green, then to bright green. That's a confirmation buy. But you can also use candlestick patterns at these levels as well. And you can also use lower time frame charts and moving average crosses. So when you're looking at, for example, a setup on the monthly chart, if you go down to a daily chart, this is where you can see much more clearly that the trend was shifting at that zone. You can also see where the critical zones of resistance were. You can see that, price was hanging out around that resistance zone at 210 for quite a while. And then upon the break higher, that's where we got a major volume breakout. So let's go ahead and look at a couple other charts. I know right now, everybody's looking for a pullback, right? And so the best part about symmetry, in my humble opinion, as a trend follower, is that it can help you identify pullback zones. So let's just start with a blank chart. I'm just going to use the NASDAQ futures. I love using the NASDAQ futures because I just feel like they lead the regular index and has better volume, trades after hours. So I usually use NASDAQ futures. So looking at this chart and trying to decide, where do you start? You're trying to identify a pullback zone in the NASDAQ. I'm trying to use symmetry. Just think about what it means, okay? What you are saying is that this is a chart that is in a trend and it has normal pullbacks, right? Any chart is not going to go straight up or straight down. I know this move has been a little bit of a blow off top, but it's not going to go straight up or straight down. It's going to pull back in the context of the trend. And so what symmetry looks to accomplish is to measure those pullbacks in the trend, okay? So if you're looking at this trend right here and you're saying, okay, we have experienced some deeper moves, right? You have this move right here. This was really right when the trend was starting, but we can go ahead and measure that one as well. Typically, when you're measuring symmetry, you do want to focus on what the market condition is like because you want to compare like things. It does not help to, compare a bear market crash to a bull market uptrend because the two situations are different. And so you want to be comparing, similar scenario. So when you're looking at this upswing, you can see that it really started right around here. We can say down here, but really around here. So this is the data that you're going to want to use. And so typically when you're drawing symmetry, you do want to wait until you're starting to see a pullback because that will tell you that the candle that you're using is the actual high. In this case, we're at the high. So I'm going to draw it anyways, but just keep in mind that the time you really want to start drawing symmetry is when you actually start seeing that pullback, because then what you're doing is you're measuring for the pullback. So when you're looking at this chart, okay, here's a pullback, here's a pullback, here's a pullback, here's a pullback. So there's lots of little ones. Here's a bigger one. That's kind of a two-step pattern right there. So these are the swings essentially that I'm going to be looking at to compare against a potential pullback here. Okay. Now I will tell you this chart has been very strong. So the pullbacks are really, really small, which is not always the case, but it is. So let's just go ahead and start with the first one. So you're going to go 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. 1, 2, 3. So as you can see, even though it doesn't feel like there have been a lot of pullbacks, there's been some minor moves lower. 1, 2, 3. So does anybody notice how we're getting a pretty big cluster of levels right there? So you might say, oh, that's really messy. Why does it look like that? Well, because you have a massive cluster of support. So after I'm done drawing my levels, what this is telling me is that, there haven't been very many deep pullbacks over the course of the past several months. I have measured what the other pullbacks looked like, and I have projected them from this high to say, you know what? If we remain in the same kind of market condition, this is the zone that I can look at for potential pullbacks. Okay. So do you notice where that zone overlaps? Okay. It's not a coincidence that it happens to overlap right at a key psychological value, which is going to be right at about 15,000 in the NASDAQ. So this is also going to overlap pretty well with this 8 EMA. I like to overlap my symmetry levels with critical moving averages. This is the 8 EMA. This is the 21 EMA. So, it's not a coincidence that we have a pretty tight zone here, 14,976 with 15,107 with, most of the activity around 15,050. So this is going to be a critical support zone. So what does that mean? Well, it means that if and when the NASDAQ starts pulling back, which I would expect it would at some point because it's incredibly extended, this is the zone to look for, okay? You want one of two things to happen. It pulls back and it hits that zone and then it starts trading higher. And then you can say, hey, guess what? I have an entry point here. I have a high probability setup. I've got a line in the sand where I can say the market has hit my support zone. It's holding. It's trading higher off of that zone. That is a reason for me to get in at this level. So that is the pullback zone in the NASDAQ that I'm eyeing. Now, your first zone is always going to be the more aggressive zone because you might say, well, Danielle, the VIX is probably going to explode and the market's going to tank here because it's gone up so high. Yeah, that's possible. And that's why you use the zone if that happens as well. So if the NASDAQ pulls back and if the VIX explodes and if this entire zone breaks, what that is a sell trigger. So when you have a very solid support zone like that and it does not hold and you get a break through that zone, oftentimes you can get a quick flush down to the next zone, which is right here. So it really depends on what price does when it hits these zones. And that's why I always like to say, you have to have multiple price targets. And it's an if this, then that situation. If this hits and holds, it's a buy. If it hits and it breaks, it's a sell down to the next zone. So for downside targets, this is the first target, and this is only the second target if that zone breaks, if that makes sense. So we have a question. Can you please apply the fib to Meta? Yes, I can. Why not use the high, low, lower, high that lives within the green candles? Yeah, so definitely, I think what you're saying is candlestick patterns. So definitely use candlestick patterns as well. I like to combine that. When you are looking at a trend, you definitely want to use, if I'm understanding your question correctly, the break of the low of the high bar. So when you have a nice trend, for example, on Meta, trending higher, this is now the high bar. For you to say, hey, this stock is pulling back, you would want to see a break of the low of the high bar. So you'd want to see a candle down below this low. That is your moment in time where you would say, okay, I'm going to apply symmetry to this chart because you're now pulling back. So yes, you would definitely combine that. So for example, on this move up higher, you have a break of the low of the high bar really right here, where this was the high bar and the candle broke. And then that would be a moment in time where you would look at, a symmetrical pullback. So let's just remove this. So here's a on the high. So this one's, if you just right click, here. So you can that this one is not perfect, but it's pretty close. So you have to remember that this is an art in addition to a bit of a science. And so you're looking for, similar moments in time. Sometimes it's going to be right on, which is great, but I personally am looking for the zone. Okay. So if you look at Meta, you can say, okay, this one, that was a little bit deeper of a pullback, but it has this move here, this move here, this move here, this move here. Those are all pretty similar. Let's see if we have another one. That was a much steeper pullback. We have some smaller ones over here. So if Meta started pulling back, we'd want to say, all right, let's compare it to the previous swings. We have a high and a low right here. high and a low right here. This one's a deeper one. So what that would tell you is, all right, if your first zone breaks, you're, using the next zone. Right here. And then these are pretty small zones. Those are probably going to be broken. Let's see. Nope, I actually got one there. All right. So again, you want to overlap that with additional analysis. So it's not just one line on the chart, right? It's, do we have something else? Do we have a key psychological value? Do we have a moving average? In this instance, we have an 8 EMA right here. This also overlaps with a key psychological value, which would be 275. When you have 272, 77, and then a 276, I call it 275, especially in the options market, you're always going to want to be trading those key psychological values with the high open interest targets. People will make fun of me online and they'll say, well, oh, you're just counting by fives. That's not challenging. It's not that I'm counting by fives. It's that when you're an options trader, you don't really want to be buying an option at 260.13 or whatever, if that's even a possibility in the ticker that you're using. You want to be buying options in those high open interest options contracts because you're going to have more liquidity, you're going to have more volume. The price is also a lot stickier at those targets. So if you're using spreads, it's going to be much more beneficial to you to use that key psychological value. Now, if you're a day trader and you're just buying stock, then yes, you should use the exact, 276. But for me, for what I do and my purposes, I'm usually going to use the, key psychological values at the high open interest strikes. So for Meta, that is what you have. We're not going to get into this in this class, but we also overlap these with additional Fibonacci levels. And you can see when I throw on a Fibonacci extension, you can see that I have a 50% retrace, a 618 retrace, and a 100% retrace. That's going to overlap with these zones, and it's going to make those zones even stronger. So we have 260, 270, 270, 277. So essentially you can go through, and you can do this with, every single chart, because at some point these tickers are going to pull back. Now, Microsoft made a new all-time high again today, but again, you just want to do the same thing. And you can see where I have my fib targets, it, traded right up into that zone. Let's see, I think that was from a weekly chart. So, you can see those targets right here on the upside in Microsoft, 348.48. That was already hit. Next upside targets, I posted those ones in the gold room yesterday, and on Twitter, you have 364 and then 387. So those are the upside targets, but what about a pullback? So if and when Microsoft gets a pullback, can we buy it? Now, and this is especially important because we have earnings coming up. So I would love to buy Microsoft for a trade, prior to earnings. But again, you want to look at the chart and you want to say, okay, what are the previous pullbacks that Microsoft has experienced? And if that occurs, when it starts pulling back, what zone will that give me to buy this thing, especially prior to earnings? So again, you just want to identify your swings. 1, 2, 3. These ones are pretty small. You can certainly try and use them, but it's just a function of how strong the market has been and the fact that the stock just really hasn't pulled back at all. I'm hopeful we can get a deeper pullback because that would give us a better buying opportunity and a better edge. So what you're looking for, and especially if you're saying, okay, well, there's lines all over the place. How is this helpful? Some charts are going to be different than others. ultimately what you're looking for is you're looking for a cluster. You want to, have as much overlap as you can have, because that makes the zone stronger. Just one level is kind of, it's kind of meh, but the overlap is going to make your setup stronger, and it's going to just give you a better, number you can work with. Now for Microsoft, you can see we have quite a bit of overlap down here. We also have quite a bit of overlap down here. This is the one that I told you was a pretty aggressive pullback zone. I would hope we would get a better pullback than that, but you can use it on a lower time frame chart, like if you're a day trader. So you can see right here, there's quite a bit of overlap at the 8 EMA. So that's going to be right between 335 and 337. Then you also have a lot of overlap right at 325. So pullback zones on Microsoft would be 325. And then I would say 335 to 337. And again, for anyone who's just joining, what you want to do is you want to only get in on the pullback if it hits, holds, and starts to trade higher. You don't just, buy it once it gets directly to that level. And then if it breaks the zone, that is a sell trigger for a flush to the next zone. What is the tool for using it? So this is going to be the tool right here. I use Thinkorswim. I think it's the best charting and the best options trading platform personally. And this is the tool right here. It's called the Fibonacci extension tool, but it's going to be the 3-pointed tool because you have to measure 3 different points to be able to draw levels like that on your charts. So another one is going to be Apple. This stock is really strong. It's just continued going higher. But what I love about it is that it tends to have just a certain personality. And if you're somebody who wants to trade a nicer, easier trend, look at something like Apple, because it's just a nice, easy, following the trend kind of chart. You have a lot of different levels that you can measure against, and it's just not something that, you're going to wake up and your day is going to be ruined because it's down 20, 30%. So, personally, like for me, I think when traders come to me and they're like struggling with what they're trading, for me, I think that a big part of the issue is the products that they're trading, because oftentimes people will, follow people online and they get into trading like MSTR and Bitcoin and, crazy tickers that move like GameStop, like 20% overnight and stuff like that. If you're having trouble and, you're struggling with volatility, just trade Apple, you can learn your skills and you can hone your trading skills on something like this that's just in a nice, easy trend without getting involved in all of that. And your life will be much easier. And, of course, that's my opinion, but that's also what I do. So, so if you look at Apple, you can see that you have some pretty nice zones here. You've got to have a cluster between 178 and 181. This is just basically telling you that this is a perfect pullback zone to look for when the market does start pulling back. So, Apple down into this zone, and ideally it'll hit, hold, and we can trade it higher. So that is about all that I have for you today. If you'd like to learn more, for those of you who are at Simpler Trading, you can just say at Danielle, ask me a question. For anyone who's outside of Simpler Trading, you can send me a comment on social media. My Twitter is at Trader Danielle. See if I can share it for you here real quick. But I'm going to be working on a series of videos over the course of the summer that are going to be just like this. So if you have any questions, comments, ideas for different videos that I could propose for all of you guys and teach, you can go ahead and send me a message on Twitter. That would be amazing, because I want to be coming up with videos that work for you, because that's what they're for. So let me know if you have any other questions, comments, concerns, and I will see you next time.